hills. Yo YouTube, it's your boy Kobus-The realist OG, inspired by the ghost of the most ICT. I'm back with another video. This is a very high time frame analysis. Okay, I'm going to be breaking it down, and then we're going to wait and see if we were right about the direction anticipation. Just want to switch on the Wi-Fi. Okay, we are looking at Euro USD and the dollar. I'm going to start with the dollar. I was busy breaking down the dollar earlier on. Okay, so when we're looking at the dollar, we see that the dollar was consolidating on a monthly, and then after it has consolidated, it spiked up, taking buy side liquidity while fully balancing that imbalance, and then the market rejected after rebalancing that imbalance. Okay, so monthly we're going down. Currently the candle is bearish. Okay, and then we're waiting for the candle to close, and then if it's a really significant bearish candle, we're gonna anticipate a bearish month after this month. Okay, and then when we go to daily, we see that the market has been in a trend line, in an uptrend. Okay, and then suddenly it has changed direction. It's no longer going in an uptrend. It has broke structure. Okay, on a daily, yes. So after filling that gap, so we're trying to connect a puzzle. Okay, on a monthly we were filling all the gap, all of it. Okay, and then when we're using time frame alignment, the daily structure, it's showing us change in direction. The market is no longer moving up, it's moving down, and we had just cleared buy side, and we are anticipating bearish prices. So we're anticipating a bearish month. Okay, so currently we are bearish. We're anticipating a bearish month. Okay, on dollar, so we are anticipating dollar prices to go down to at least $105. So currently we are at 107.455. okay, and then we are aiming at what, 105, which is somewhere there at the imbalance, which is on a monthly, and then there is a liquidity above that imbalance. That means there are stops resting below there. Okay, it's liquidity there. We rebalanced an imbalance in an uptrend. Now we are changing direction. We are going to rebalance the internal range liquidity, which is the imbalance, this one. Okay, let's see if we are right. So we're waiting for a cell model to form here. You know, those continuation models. Not sure if you're familiar with the structure. It's like this. Let's say we had a high, a low, maybe a high, and then a low. We're balancing. What happened? A model like this, a continuation model. This is a high. We're rebalancing an imbalance here, and then we break the low once more. This low. So we're expecting the market to do the same thing which it did here, here. Okay. So we're anticipating the market to visit the discount of that for selling models, and then for buying models it's vice versa. It's like this. For example, if you have a low, a high, a lower low, a high, we are balancing an imbalance, we break structure one more with momentum and leave a gap, we come and rebalance the imbalance. Our aim is this high for buying. Okay, so it's a reversal model. It's like a continuation model of reversal model. It usually forms as a, it's like something which is the price used to propel the algorithm used to propel price further. So we're expecting the green candles to be an order block there, and then we are going to see how the market reacts at that level. I think it's also in confluence with the 50% of the monthly gap. So I believe since you are trading above that price, market may use that level as resistance. Okay, that price, how much is that price? Let me check. The price level is 107,748. So, and this price level here, it's 105. This one here is 107. So where is the market likely to go compared to here and here for now? I think it's here according to the way I'm viewing this market structure. So the market is likely to visit this place first before it comes here at our internal range. Right now our focus is here. We are looking at the daily time frame, so nothing less than that. We're just going to wait and see how this plays out. Okay, so this is euro dollar, this is dollar. You know, if dollar is going down, countries that are paired with dollar and they are trading against dollar, they will go in the opposite direction. If dollar is going down, foreign countries currency will go up, because it's like dollar versus those countries. So here we have British pound. So this is Britain against the dollar, the British pound, which is Britain versus the United States. Yeah, I think so. USA. So we are finding some synchronicity with Gbpusd, with Eurusd. What dollar is doing, Eurusd is exactly doing it. Okay, so they're in they're synchronizing with each other inversely. Okay, we have a monthly gap there. We we rebalanced it. We went to the 50% of it, we rebalanced it, and now we are showing bullish prices. Where is our nearest most drawn liquidity? Here. So from here we are looking for bullish prices, and then we're gonna go to daily to look for entry models. If the market expands above this and this, it means it's reaching for this liquidity. Accumulation, manipulation into a gap, and then now we seem to be rejecting. All this time we have been bearish, on bearishness. And then suddenly we have bullishness. Okay, we are looking for higher prices. Currently where the price is, or we can start by going down with the price and then turning back. Some muscle, the market, my attention was distracted. We've been in a downtrend all along, okay, until price came to 1.01. This is the euro against the dollar. So euro against dollar is euro USD is 1.01779 now, and then it went, no, not now, it was, this was the turning point while we were rebalancing the imbalance. Okay, so this is the turning point it formed, and then we started to disrespect bearish arrays. We disrespected this gap here, and then we used it as support to propel price further. There's also a sweeping liquidity here. This is a rejection candle, so we are sweeping liquidity, and then we disrespect a bearish array. Okay, support, when we go below support we use it as resistance. When you go above resistance we use it as support. What is our support in this case? I think this inverse gap. The market went above it and then it came, check, it went above it with one candle, but it retested it with 3 candles. So these candles were accumulating. The 4th candle expanded up, clearing this buy side here. So dollar is going down, at the same time euro USD is going up. So as dollar continues to drop, we want to see this one rising, because they're inversely proportional. We rebalanced a monthly imbalance, and we were on a downtrend on a daily. After we had rebalanced the majority portion of that imbalance, we went below the 50% level of the imbalance, and then we changed direction, and then we see a sell mode, a buy model there. Okay, so the puzzle is that we are expecting a bullish month. Okay, we rebalanced an imbalance, and we are anticipating bullish prices. The current month is bullish, so if it forms a significant bullish candle, we are anticipating that the next candle it is going to be bullish also, when we are using the candle range theory. Okay, so now we are seeing a bullish structure for me, or a buy program. Okay, so which is aligning with our anticipation that we want to see high prices. So we want to see high prices. We are seeing a buy model. This buy model is synchronizing with our higher time frame, so they're in sync. So for me, I believe it's a high probability trade. Okay, so remember, we are learning here. It's only for learning purposes here. I'm trying to articulate the ICT concept and make them make sense to me. So hence I said during the day, I said, I don't know which video it is actually. I had said even if you learn any strategy from everywhere, you have to get to a point where you let go of that person who taught you that strategy and try to utilize the tools that they provided to you on your own and see if you can use the tools. It's like they're giving you a what kind of tool can I make an example of? Any tool which you can think of. A car is a tool. So even if they are teaching you how to drive, you have to one day drive on your own. So you're using the ICT tools and then try to use them to predict direction on your own. Okay, make them make sense for yourself. If you another thing apart from the language, if you observe the market actively, you'll end up figuring out the repeating patterns in the market. That's your nature as a human being. You're intelligent. So if you observe the market long enough alone, in the beginning I don't advise to observe with friends because it's a mess, but maybe once you solidify, we can try to approach each other and share views. Okay, this is from my personal experience. I don't know, I believe trading it's some solo game. You have to learn first, not cram. You have to learn first. This thing requires discipline. It will discipline you. So we can trade, maybe both of us, and maybe let's see that when you who's listening, you are the second person. You can provide me with signals and we both make money. For me, I don't feel like I'm the one who's trading. If let's say you happen to go on a vacation or anything, maybe you lose contact, it means I'm stuck. So I believe you have to learn on your own, and then after learning on your own, when you have confidence, you can try to see, or you can try to check out how others who you trade with, maybe if they're there, how they look at the market. If you're in synchrony, if you're synchronizing, it means both of you are progressing well. So currently we are looking for bullish prices on Euro-USD. Euro-USD it's behaving exactly as the Euro-dollar. I mean as dollar, but you know it's opposite. They're inversely correlated. Let's check Euro-USD. Gbpusd. Okay, already we see a buy model, but what is it? What did it do on a monthly? Okay, Eurusd, Gbpusd. It took a liquidity. Oh, okay. I'm going to approach it like it. It took a liquidity. Actually, many ways to approach this, and then I take this as an order block for me. Okay, so this is not a break of structure for me. This is a liquidity sweep here. Either way, after taking liquidity, we have, I believe there must be some sort of like retracement if we are bearish. So from here on Gbpusd, because we are trying to synchronize Gbpusd with Eurusd and against DXY. So we formed a low here. Okay, we were in a downtrend here. We swept liquidity here. For me, where is the next likely liquidity to be? Let's say buy side. We even have a relative highs here, if you can check. Okay, so that supports our, it's like, why are we saying the market is going up? This line is a magnet. It's throwing in the market. It's throwing the market. So we're bullish, and then when we dive deeper into the market, we see that we tapped a monthly order block while sweeping a monthly high. So we swept liquidity, and now we are approaching the end of the month of January, and then we seem to be closing inside December's range. Okay, according to the candle range theory, see, that's a reversal candle. We're expecting the next candle to be bullish. Okay, to be bullish. So we are just expecting the next candle to be bullish. Where is the next likely liquidity? For me, I'll just, because we are dealing with candle range theory, I'm just gonna look at that high, the weekly high, the December highs. Okay, so we are creating a buy model. Okay, after tapping an order block on a monthly. Okay, this is the open. After we had tapped the monthly order block. Okay, you can see that that's the monthly order block. After tapping the monthly order block and sweeping liquidity, we expanded up, and now we are creating a buy model which agrees with DXY and Eurusd. We seem to be disrespecting this gap here, so we're disrespecting a bearish array while creating a buy model. So we have a support here as the inverse gap to support our idea that we disrespected a bearish gap, and then we're creating a bullish gap. That's, for me, I know, for me that's a high probability support. When we disrespect the gap and we create a gap, we just disrespected a bearish gap, and then we are forming maybe a bullish gap. Okay, so that means that area I like the way in which they confluence. They are likely to act as support, because let's say maybe there was no gap here. I want to see this being used as support. If there's a gap, so now it means it's two birds with one stone. Okay, so we want to see how the bimodal forms here. So that's what I have for you guys. You know where the material is. I've been saying where to go if you want to learn. Hear me, I'm just sharing how I view price for learning purposes. If we seem to synchronize in what we are able to observe, then we all learn and we move forward. So yeah, I'm signing out. Peace and love. You know who it is. This is my side. I'm gonna take my. You know how this thing is, ne? To people who are still beginning, or people with experience, they'll probably agree. You have to have, when you are trading, when you are a trader, you have to be some sort of like stubborn. Stubborn, what do I mean? Like, this thing will disappoint you. I'm not sure if stubborn is the right term to use. This thing will disappoint you multiple times, and you know what you have to do? You have to show up every single time. Show up, whether it moved you or what. You have to show up and tell it, I'm back, and follow the rules. That's how it is. Through experience, there will be progress. I wanted to say something. Yeah, I forgot. But yeah, it's a journey. Be patient. Don't rush it. The failures are necessary for your growth. You should take them as a motivation. I usually say failure is like an enclosed envelope which has a lesson inside. You just have to open and see what you are learning from that experience. It's not a nice experience, but it brings a better tomorrow. So it changes you, it transforms you, it elevates you. But I think we stigmatize it. We take it as a bad thing. It's not a bad thing. It builds you. The best thing you can do for yourself when you're failing, or maybe when you're taking a loss or anything in life, is to remain calm and allow things to unfold the way they're supposed to unfold. Either way, you win. So stay calm. Okay, if the buy side liquidity, you could look for this area here in these highs. Okay, so entry is going to be on 4 hour or 1 hour. Okay, on demo account. I'm signing out. Peace.